Hello, my name is Pedro Nunes. I am an etoro popular investor, also known as PM Nunes. And with this video, I will start a monthly video about the market, about my portfolio, about the news, about what's happening in the markets. And this is a way that I can keep in touch with my copiers and with other people. But at the same time, I have the time to focus on the portfolio, which is my main task. The name of this monthly video will be the investment dossier. We live in very challenging times. In past videos, I had the perspective that this year would be a very difficult year. And the first reason was what happened since the beginning of January with the news of high inflation. The Fed had to change a little bit the narrative, and it made the commitment to increase the interest rates, and the market, especially the tech stocks, were very effective, and even the general S&P 500 index had a drop of about 10%. And now we see the market very upset about the situation in Ukraine, the geopolitical implications, the commodity prices. This factor is also affecting and making a persistence in the downturn of the market. Of course, we are in a point where everything can happen relating to Ukraine. We saw that in the beginning there was a drop. Then after, the markets tend to anticipate not so bad situation, and that the scenario would resolve itself in a good way. But it's still too early, and anything can happen, and nobody knows for sure what will be the outcome of the Russian attack to Ukraine. And if you saw previous videos, I was a little bit cautious about this year, and I had put a very large amount in cash reserves previous to the January drop, and this made me possible to buy when the market was down in January, and this is why my portfolio dropped less than the S&P 500, more or less half of the drop. So in 2022, I have, as you can see, 7 baskets where I put my portfolio. And first, I have with 40% what I call indices and stocks that are very important. I have a big percentage in indices and in main stocks, mostly because, as I told before, we are utilizing, and we did it in the past, some kind of timing, which is very difficult. But in September, we were able to figure out that the market was going down, and in the January too. So in doing so, we know that when the market will go up, we will not be affected by the risk of individual stocks. Of course, we have individual stocks, but I have to remind you that my portfolio is more protective and stable portfolio, and we are trying to have less volatility than the market, and we were able in the past 2 years to do so. And this is why I have 40% with individual stocks and indices. As you can see now, that was the ideal percentage that I presented for this year, but in the present moment I have 51%. Why do I have this difference? Because since the market is persistently going down, I think that we must, and since we have cash, as you see, at the moment I have 30% in cash for the possibility of the market is going lower. And last week I had about 20%. When the market dropped more, I bought more, and mainly more indices. And in this way, I think that in the future, when the market will rise, we will rise with the market. And we, since the beginning of January, we have a cash reserve that is less than in the beginning of the year, because when the market was going down, we bought mainly indices, because I don't want to be at the mercy of the risk of some individual stocks and with big positions in individual stocks. And this is the reason why I have more than what I intended. The second part of the portfolio, it's what I call teams. The name is in Portuguese, but it's the same thing. It's in Portuguese we say temas. And we have, in the beginning of the year, I choose some kind of teams that are the ones I have there. One of them is China. Why China? Because China is very undervalued regarding the American stock market. It's a very risky market, but we have a small position, and I think that in the future we can gain here a very good risk reward with a very tight stop loss, and China is one of the teams. Another team, it's very controversial sometimes, but as we see in the right now situation, it's a good decision. Cybersecurity and defense. I know that sometimes we don't like the defense sector, but as we see, it's important because we have to have ways to defend ourselves. And if we don't, if the civilized world doesn't have the proper capabilities of defense, we are at the mercy of the enemy or other countries that have a more aggressive position. So I think it's a very important sector. Another sector, semiconductors, of course, we are seeing shortages. This is the future. And for me, it's another important sector. Energy, of course, not only the transition from oil to new forms of energy, the energy sector will be one of the most important in the futures. Then, because of inflation, I had choose the financial sector. And the other sector that I have, it's biotech. Not only because biotech was the solution to COVID, but because I think that the biotech sector and the developments from the biotech companies and the solutions for the COVID situations will be the solutions for many of the diseases in the future. So this is a long-term perspective. What I intended was 20% in the team sector. At the moment, I have 16.5%. Because of inflation, this was what was in the beginning of the year one of the best performing sectors. I think I should enter early, but the prices were high. But the commodity sector with 10%, it's a part of the portfolio. The commodity sector is a part of the portfolio, very important, and not related to stocks, and as a way of protecting against inflation that is very high. Then we have, in a well diversified portfolio, we have what I call the protection part. Sometimes I use the VIX. I don't have the VIX right now because we have a lot of long positions and we are positioning ourselves for the future with the opportunities that were presented in terms of price. So we are not seeing protection right away. We are positioning ourselves for gains in the future. But I have some bond ETFs that, for me, they are always important. And I think they are dropping less than the general market. And I know this is a little bit of controversial, but when the interest rates will go up, I think that some of these some of these bonds will can be attractive for many investors, and I'm observing a lot this part of the portfolio. And in both in commodities and in protection, I have a little bit less than the 10% that I signed for the portfolio. Forex, I have been making a lot of forex positions, um, with a big percentage of winning in that forex positions. It's a way of edging and balancing the portfolio, not related to the other asset classes. And this is a way of giving protection. I have 2.5%, but many times I open the remaining parts, and um, when I'm winning, I lock the gains. That's why I'm opening and closing the positions to bring gains to the portfolio. I had assigned 5% for crypto. I have one, not directly in crypto, but in a company related to crypto. Last week I had more, but I think that at the moment, and in a very protective portfolio like ours, we must be very careful about the crypto. And for now, I have just 1%. And regarding the other part, it's the cash reserves. I tend to have 5% of cash reserves. We are with 13%. But as I told you, in the beginning of the year, we had 50%. So we are buying. So what seems to be a lot is in a way of buying assets at good prices. When the situation will be stable, I think we can go back to the normal or even less than normal. What factors are important to the market right now in terms of the short-term scenario? One of them, of course, like I told you, it was the Ukrainian situation. We must be prepared for everything. And we must, the way I'm positioning the portfolio is thinking about long terms, um, about a long perspective, and try not to look at the smoke and the news and events and the tragedies at the present moment, and not be influenced by that in terms of the management and the volatility of the portfolio. Another factor very important is the next Fed meeting in March. From a monetary perspective and from interest rates decision, the way that the Fed will try to decide the interest rates hike and the way they will manage the balance sheet, it's very important. And the stabilization at short term can only come from these two aspects. One, the Ukrainian situation, two, the Fed meeting. So we are very cautious about the scenario. Of course, we made decisions at long term. We will not turn back. And as I show you, we still have money if the market goes lower to buy regarding a long-term perspective. And this is what I think it's important in terms of the situation in the next month. I hope you enjoy and you subscribe the channel. I return with the investment dossier in April. Thank you.